Well, hello, welcome to Business Morning. Still the Christmas week trade. Today we'll drill down on how microfinance banks are supporting small businesses to expand festive sales and what's happening with fuel prices in Nigeria. But first, let's review some markets now, starting with the local bourse. Now, we see the Nigerian stock market kicked off the week in the green as renewed buying interest lifted investor wealth by 257 billion naira. Despite softer trading volumes there, but a 0.26% advance. And we see the equity cap, 97 trillion naira, 152,459 points right there, still sitting pretty above that 150,000 level. Then I will look at trading volumes for yesterday. Okay, top trades, tantalizers, 50.18 million. That was traded there. Top trade for yesterday. First holdco, after getting the shine and attention last week, I see that's also continuing in this holiday shorted week. 32.62 million traded. Access code, that's also financial services, 27.32 traded. And we see the activity volume, 451 million, valued at 13 billion naira. Deals, 33,327 traded there. And we see this one again shining. They gained over 40%. Last week, it was a top gainer for last week, and I guess that's continuing this week. This bullish run, 9.72%, 13.55 naira to close. We also see Mikio there, that's in pharmaceuticals, up 9.64% yesterday. So it was a good market. Definitely investors will have a direction on what's going to play out for today and tomorrow. Custodian tops the losers chart, 10%, big one, down. Yesterday. Let's get a check on the oil market now. So much attention there. Oil prices dipped today as traders, they balance rising geopolitical tensions with weak market fundamentals. We see the impact right there, $61.93 a barrel. For Brent crude, 0.23%, not much action there. WTI, 57.86. And definitely we see after Monday's gains, that marks Brent's best day in 2 months and WTI's biggest jump since mid-November. Analysts now are watching out for U.S. plans there to seize Venezuelan crude and Ukraine's attacks on Russian vessels for signs of further market swings there. Definitely, with all the controversy going on with Venezuelan ships there, definitely that's driving investor sentiment. They feel like if those ships are being seized, then that oil is not coming to the market, and thereby that took up the prices yesterday, but we're seeing a pullback right there after starting off the week strong. All right, let's look at other matters now in the oil and gas industry. Back here, Dangote Petroleum Refinery announced a reduction in minimum order quantity for petrol, cutting it from 500,000 liters to 250,000 liters. The move priced at 699 naira per liter ex-gantry is expected to improve access for marketers, boost supply flexibility, and ease distribution bottlenecks. The refinery is also offering a 10-day credit facility backed by bank guarantees with plans for free delivery to stations. Analysts say this could reshape competition, pricing dynamics, and product availability in the downstream sector. So that's it right there. 250,000 liters, that's the minimum order coming from the Dangote refinery. Meanwhile, petrol supply in Nigeria surged 55% in November 2025, reaching 71.5 million liters per day, up from 46 million liters in October. That's according to the NMDPRA report there. Consumption also jumped 44.5% to 51.1 million liters daily, leaving a healthy surplus of 37.4 million liters. The boost came largely from NNPC Limited imports aimed at building stock ahead of the peak festive season following a shortfall in September and October. And Africa's crude oil demand is set to skyrocket from 1.8 million barrels per day in 2024 to 4.5 million barrels per day by 2050, making the continent's downstream energy sector a hotbed for investments. The African Refiners and Distributors Association are confirming that with 1 in 4 people on Earth expected to live in Africa by mid-century, fuel demand will soar, but heavy reliance on imports leaves markets exposed to price swings and supply disruptions. ARDA estimates over $100 billion in refining investment will be needed to meet the future appetite for cleaner fuels. All right, and to other matters besides oil now. The Nigerians in Diaspora Chamber of Commerce, NIDCC, they've unveiled 8 new investment platforms aimed at tapping the $20 billion in annual remittances from Nigerians abroad. Launched in Lagos under the theme, The People, the Business, and the Future of Emerging Markets, the initiatives are designed to provide secure, transparent, and structured opportunities for diasporans, bridging the gap between emerging and advanced markets while boosting national development. All right, so also talking about dollar inflow there. Nigeria's capital inflows tumbled 62% in August 2025 to $1.13 billion, despite a 140% surge in foreign direct investment to $120 million. The Central Bank of Nigeria reports that while equity-driven FDI benefited from relative economic stability, declines in portfolio and other investments dragged overall inflows down, highlighting mixed signals for investors there. At the federal government, they've announced plans to tap into Nigeria's largely informal vehicle recycling market. Speaking with journalists, the Director General of the National Automotive Design and Development Council, Mr. Joseph Sanipi, estimates an annual revenue of over 150 billion naira from 2026 as part of efforts to modernize the nation's automotive industry. Mr. Shanipi explains that the initiative would be driven by a comprehensive end-of-life vehicle. Also says that the policy would formalize the recycling of vehicles that have reached the end of their useful lives. Take a listen.
Some change their tire once in 2 years, some change once in 3 years, but some change every year. And I know the GUO, the God is good, they change every 3 months. So that tells you what we spend on parts. That is just one of the parts. And because we need to grow that sector, we are focusing more on component parts, especially when after Africa free trade, Africa continental free trade area has taken effect. Now we need to take it serious because we have what is known as 40% rule of origin, and we have to take advantage of that rule of origin to be able to sell component parts to other countries in Africa.
All right, let's move on to our first conversation. As 2025, winds down, it's been a year shaped by, tight monetary conditions, persistent inflationary pressures. Even though we've seen, elevated inflation, that's been on a downward trend. I've also seen currency adjustments and a cautious credit environment, all of which has tested businesses, households, and financial institutions alike. Yet, within these challenges, we've also seen, innovation, resilience, and new growth models emerge, particularly in non-interest banking and microfinance. I'll reflect on the key lessons from 2025 and looking ahead to 2026, examining macroeconomic expectations and opportunities for small businesses. Well, joining me for this conversation, we have Mr. Hamid Joda, the founder, Managing Director, Taj Bank Limited. Great to have you on the show, sir. Good morning, and compliments of the season.
Thank you. Thank you very much. Compliments of the season.
Fantastic. So, looking at 2025 so far, what would you describe as the most, defining features of Nigeria's, economic environment so far?
Well, as you're aware, we had a tough start to the year. When we started, the Nigerian currency was not very stable, and fuel supply was also not quite stable in the environment. We had a lot of microeconomic issues in the beginning of the year. Interest rates were very high. When we started the year, inflation was around 33%. So it was a very difficult start to the financial year. But as the year went by, and with the policies that we had from MPC, as well as the fiscal side of the economy was able to show signs of strength, by the second half of the year. So, in fact, now there is a lot of good news coming out of the environment. For instance, inflation is around 14.5%, which is a significant drop. That's more than 50% drop in terms of inflation. And interest rates, well, in terms of interest rates, we've seen some kind of tapering from the MPC, dropping from 27.5% when we started the year. I believe that very soon interest rates will begin to taper down. And of course, we've also seen some credit flow into the economy towards the second half of the year. And more importantly, we've seen currency stability, because currency stability is very important in an economy. You look at economies in the GCC where their currencies have been stable for the last 20, 30 years. And in Nigeria, we've not had that same kind of stability in place. But now, with the policies that we've had from the central bank, Naira is quite predictable. Naira is hovering around 1,450. So it's very predictable, and the economy is beginning to stabilize. We also have some predictability in terms of fuel supply, the retail end of the market, even though there are still some disruptions here and there, but there is a lot of stability in the economy going into 2026, and we are quite optimistic about what is actually happening in the economy.
Yeah, fantastic. I guess we'll take stability at this point. But how did, elevated, interest rates, even though we had one rate cut in 2025 from the MPC, declining inflation and, liquidity tightening, how did that reshape, banking operations, this year?
Well, it was quite tough because we've had, whenever MPC dictates rates, and especially when rates are up, it affects lending rates. So in the beginning of the year, rates were fairly lower, but by the time we started having tightening, in fact, from 2024, from now, we've had a significant jump in terms of lending rates. So that created some kind of issues for creditors. So that's one important thing to note in terms of credit. So that was quite difficult. So if you are running a business, number one, you see your rates, your lending rates going up as a result of the tightening in the economy. And of course, we've opened the year with inflation at around 33%. So that was also significant for businesses in terms of cost of running the business. So it was really, really tough. But now, and it was tough for everyone, not just for banks, but banks really felt the pinch. So it's always very difficult to meet customers and tell them that their lending rates are actually going up. So that was a difficult period for banks. But I think now we have some stability and predictability, as I've said earlier.
Right. And do you think, microfinance banks were able to provide some kind of succor, for small businesses, at this time?
Yeah, they were. But, as you're aware, the microfinance landscape is changing because a lot of the digital banks or neobanks that we have in the economy, they are operating under microfinance license. And they've really grown very, very big in the last 5 years. And that's one of the most remarkable things that we've seen in this economy. Microfinance banks, neobanks, growing significantly. In fact, today, one of the biggest neobanks has more than 50 million accounts. So they've really grown. And in terms of retail credit, they have devised means of pushing out retail credit out there to the market. So I think they've done fairly well, primarily because of the digital lending model that a lot of microfinance banks adopted within the year. So microfinance banks have fared quite well. The traditional ones haven't really, those who haven't changed their model to digital and those who haven't scaled haven't really had a very fantastic year because of the inflation, the currency stability issues, and so on. But those who have made the pivot to digital, they have done very, very well in the financial, in terms of deposit mobilization and also in terms of creating credit in the economy.
All right, so how do interest rates decisions, how does it impact, non-interest banks?
Well, it does, because non-interest banks are operating within the banking ecosystem, and whenever interest rates go up on the conventional side, definitely your customers will come to you and tell you that interest rate, the rates they are getting on their investment is going up on the conventional side, or maybe they are getting 18, 19% from conventional banks. And as a non-interest bank, definitely you have to respond to that by also increasing your rates, your investment rates or deposit rates. If you don't do that, you will have what is called displaced commercial risk, where your customers begin to move from non-interest banks to conventional banks, and you don't want to see that. So definitely, by the time rates are going up on the conventional side, definitely on the non-interest side, rates will also move up. Likewise, on the financing side, by the time rates move on the deposit side, that means your cost of doing business has gone up. Definitely, you have to also increase your financing rates. But one thing in non-interest banking is this: by the time you lock in and you create that financing, you cannot come back tomorrow and tell the customer that you are increasing rates. It doesn't happen. Okay, so that's one disadvantage that non-interest banks have. But generally, because we are operating within the banking ecosystem, whatever happens on the conventional side also affects the non-interest side. So when rates move up there, they also move up on the non-interest side. So that's the way it works.
Right, and earlier you did mention, some banks, neobanks, growing at an impressive, rates, in 2025. Recently, your bank emerged the largest non-interest bank in Nigeria, and I'm wondering, some of our viewers wonder, what does it mean to be the largest, by assets, in Nigeria? What does that pertain, really?
Well, it's a big responsibility, and it shows that Nigerians have accepted the non-interest model. Remember when non-interest banking started in Nigeria, there was a lot of skepticism. People felt maybe it was for one side of the country or whatever. But at the end of the day, we've been able to prove that non-interest banking is for everyone, regardless of tribe, regardless of religion, and all of that. It's a banking model that is open to Nigerians from all walks of life. So I think the growth of Taj Bank and the compound annual growth rate that you've seen, and the emergence of Taj Bank as the largest non-interest bank, speaks to that in terms of acceptability of the non-interest banking model in the market. You look at Malaysia. Malaysia, for instance, 50% of the banking system is non-interest. And Malaysia is a far more developed economy than Nigeria. So also here in Nigeria, you are seeing a lot of growth. When Taj Bank came on the scene, we had only 2 non-interest banks. Today we have about 5. I'm sure before the end of the first half of next year, we'll have 2 more in the economy. So generally, Nigerians have embraced non-interest banking. Nigerians from all walks of life have embraced non-interest banking. And I think the future is looking bright for non-interest banking and generally for the economy. You've also seen sukuk issuances by the federal government oversubscribed by 600 and something percent. Recall that we also issued our own sukuk, Taj Bank sukuk, during the year, and we achieved about 285% oversubscription. And that oversubscription came from everywhere, from all the states of the Federation, from all groups. So it means that the non-interest banking model is gaining significant traction within the Nigerian economy. I think it's good news for the country.
And all this, all this happening, even with some macroeconomic headwinds at this point. What makes this kind of growth possible? Well,
we still see opportunities in the economy. I personally believe that Nigeria is still underbanked. I believe there are still opportunities here and there. For instance, I gave an example with the neobanks. The neobanks started 5-6 years ago, and I believe one of the biggest neobanks has about 50 million accounts, and they've done it within the last 6 years. So we see a lot of opportunity in the economy, in spite of the challenges. You look at the economy is also growing. It's not as if we are in a recession. The economy is also growing, and especially for non-interest. People are yearning for non-interest, and I think that segment of the market is still underserved. Hence, you see a lot of institutions coming out to set up windows and also to set up non-interest banks. So we see that yearning, and it's not only in one section of the country. We see that yearning all over Nigeria now. People are yearning for non-interest banking. So with that kind of yearning and with the growth in the economy and the opportunities that we see, I think the trajectory is upwards, not downwards.
All right, definitely a quite interesting one there. But, what lessons from 2025 would you say are most critical for financial institutions, navigating uncertainty?
Well, like I said, when we started the year, inflation was very high. In fact, all institutions have had to review salaries. We've had to cope with extremely high cost of doing business that seep through the year. Also, currency stability is one major issue, especially for banks that have opened lines for customers overseas. It's always very difficult for customers to pay down on those lines when the naira loses value. A lot of challenges keep happening, but thank God the economy is stabilizing and we are looking into the future with a lot of optimism. But I think the most important lesson is to look at all scenarios. In terms of your planning, you have to look at all scenarios. Don't just look at, okay, the economy is stabilizing or currency has stabilized, but also do what we call sensitivity analysis. Sensitivity analysis is what if analysis. What if something goes wrong? How do I react? So that is it. But I think if we are able to do that and do that very, very well in terms of looking broadly and looking at what challenges may arise in the economy, we'll be able to navigate through whatever comes our way, whether it's good or bad. And that is resilience, if I may use that word.
Fantastic. Well, we need a lot of resilience, at this point. But looking at small businesses,
yeah.
We know MSMEs, they face a tough year with limited access to, affordable credit. From your perspective, how would you say, most of these small businesses coped?
Well, it's been a very challenging year, especially the first half of the year. And MSCs are very, very important to the Nigerian economy. First of all, MSMEs create 84% of the jobs in the country, 84%. That is significant. The jobs that are created today in Nigeria are created by the MSMEs. That is one. Secondly, the MSMEs control not less than 50% of the GDP. They contribute not less than 50% of the GDP. So MSMEs drive the economy. And, in terms of credit, they've not really had a good run. Why? Because interest rates have been very high. And whenever you have interest rates at that level, at 30-something percent, 40-something percent, in fact, some MSMEs are borrowing at 45%. So there is no way you will unlock growth in that segment until and unless you have lower interest rates, or maybe you bring in some kind of partnership model that a non-interest bank is able to bring into the market, which a lot of non-interest banks have introduced partnerships with some of those businesses out there to unlock opportunities and unlock growth. But generally, I wouldn't say that MSMEs have fared very well, even though they are the biggest players in the economy if you aggregate them together. So it's been a very tough year. But I believe that now that inflation is coming down, I predict, although I'm not sure, but I predict that MPC may consider what is happening in the economy and say, okay, it's time to unlock growth. How do we unlock growth? Let's bring down interest rates and let's also encourage lending in the economy. And once that decision is taken, I'm sure lending rates will come down, and then you will begin to see SMEs enjoying credit at lower rates. Such that they are able to bounce back and play the role they are supposed to play in the economy.
But seeing, what's playing out, in the economy for 2025, what's played out with inflation rates, tending downwards, that we had that first cut in 2025, then, now had a hold, from the MPC. Is that giving you confidence, in 2026 that we'll see, interest rates come down, drastically?
Yes, absolutely. I'm very optimistic about 2026, and I'm placing my bet on a very good year in 2026. Why do I feel this way? Number one, as I've said, the currency is predictable. The Naira now is predictable. Naira is trading. You can safely say that Naira is trading at 1,450. That is good for the economy. And that is what we are taking into 2026. And I don't foresee spikes in terms of loss in the value of the Naira. Possibly we may see some gain, but most important word there to look out for is stability, which we are seeing in the economy today. Now, the next thing is inflation. Where is inflation? Inflation, at the beginning of the year, it was 30-something percent. Today, it's 14%. You look at the components of the CPI, food inflation is tapering downwards. There is predictability everywhere in terms of rates, telecom rates, in terms of oil and gas and so on, at the retail end. So by the time you aggregate all the components in the CPI, you find that inflation is likely to even taper a bit downwards, maybe 12%, I'm not sure. That is also quite significant in the economy. Third, you are also looking at the well-conceived recapitalization exercise that the central bank embarked upon. It will round up by March 31st next year. And by the time we round up, banks will have a lot of capital on their balance sheets. Now, what will they do with the capital? They will be looking for outlets, for credit outlets. And that's why I'm optimistic that credit will flow to MSMEs and credit will flow in the economy by next year, because banks will be looking for opportunity to deploy funds. So if you aggregate all these indices, you are looking at a year that is going to be very good for the country in terms of bouncing back, in terms of the growth rate in the economy, and all the other economic indices. I'm very optimistic about the year.
All right, businesses, you heard it from Mr. Jordan there. Credit will flow in 2026, and we're definitely looking forward, to that. But before I let you go now, I know you recently signed an MOU with NACON, that's National Hajj Commission of Nigeria. Can you explain the motivation behind this?
Well, it's an initiative by the National Hajj Commission to give an opportunity to intending pilgrims to save on a small-scale basis. Let's say you have a target of going for the Hajj in the next 5 years. You can start saving today. So you save, if I may use Nigerian parlance, small. So you can embark on some kind of target savings exercise, take a 5-year horizon. Within 5 years, you would have amassed enough money to pay for the Hajj. Last year, I think pilgrims paid about 8.5 million. Not many Nigerians have that kind of money sitting down. But if you give Nigerians an opportunity to save in bits and pieces, then they will be able to have some kind of target towards going for Hajj. And that could be maybe 2 years, 3 years, depending on the horizon that any depositor would want to take. And I think it's very good for pilgrims. But more importantly, if you look at other jurisdictions, for instance, Malaysia, they've had this kind of program running since 1963. Today, in their Hajj savings, they have $28 billion. And with that $28 billion, they've been able to make significant impact in the economy. Through that fund, they invest in banks, they invest in infrastructure, they invest in significant impact in the economy. Indonesia started their program in 2017. Today, they have about $10 billion sitting in that in the kitty. And with that kind of volumes, they are able to make impact in the economy in terms of investments, infrastructure, and what have you. That is my prediction. In the next few years, by the time Nigerians key into this, there will be a large pool of funds that the National Hajj Commission can use to impact in the Nigerian economy. So I think it's a win-win for both sides. For the intended pilgrims, for the National Hajj Commission, it's good for their planning purposes, and it's also generally good for the economy, because by the time we have a large pool of funds, we'll be able to intervene in infrastructure, we'll be able to intervene in critical sectors of the economy with that kind of large pool of funds. So it's generally a win-win, and that's what it's all about.
All right. Generally, I believe, with what consumers, the average Nigerian consumers, been through, with, higher prices, affordability issues at this point, I guess the small package or the small model, we need a lot of that, for housing, buying cars and buying the things that we need, in 2026. Well, thank you so much, Mr. Hamid Joda, founder and managing director, Taj Bank Limited. Thank you for coming on the show today.
Thank you. Thank you very much. Thank you.
All right, we'll take a break now. When we come back, we'll find out what's going on with fuel prices. That's in a moment. Just stay with us. I would say fuel prices are dominating headlines across Nigeria with, premium motor spirit now selling between 739 to 850 naira per liter in different states. Let's talk to Mr. Former Wokolo now, Assistant VP, Economic Research, Financial Derivatives Company. Join me right here in the studio. It's great to have you, ma. Good morning.
Good morning, laddie.
Yeah, so just a couple of days to Christmas at this point. I hope you're feeling the vibe.
Yeah.
Somewhat. Some of us are still struggling. Last time you and I talked about live chicken.
Wow.
And, I told you how I was struggling, to buy live chicken. But let's look at PMS now. Why do we have different prices, at this point of PMS?
Well, compliment of the season, laddie.
Compliments of the season.
By this time, of course, we know that what we've been seeing over the years is during Christmas season, you see people with kegs lining up at the filling station. You see vehicles lining up to get fuel. But at least for now, we've gone past that stage. Kudos to Dangote, we've gone past that stage. And we are seeing this volatility in price because of competition. There's a price war. And when there's a price war, it simply means in the long term, we're definitely going to have a price leader. Because this market is a kind of trying to find new equilibrium. Yes, when the market is finding new equilibrium, what that means is that there are policy changes that have distorted the market. So when subsidy was removed and the market was deregulated. So here is competition. It's now an open market for competition. And when that is happening, there's what we call price discovery in economics. So this is what is happening. So there must be a price leader.
I pray it's a price discovery that goes down. I'd like that kind of price discovery.
Of course, prices are coming down.
Right.
When you talk about
that keeps
PMS
going
now, but it can't keep going down like that, because when you talk about the price of PMS, the price of PMS is as a function of production costs for Dangote that is producing within the country. Then it's also as a function of the landing costs for those people importing. So these two, both the production cost and the landing cost, is also a function of global oil price. So prices declining.
Which has been coming down. Global oil prices.
Global oil price has been coming down compared to exactly according to forecast. So what we are seeing basically, we have what we call the short-term winners and the long-term winners when it comes to price war. And the short-term winners are you and I, consumers. You see prices coming down, and you also see that we have ample supply. There's no shortage anywhere. You can drive into the filling station whenever you like, and you get your. Then in the long term, efficiency, we're going to say market efficiency. Aside market efficiency, you see those firms that have what we call economies of scale are definitely going to be those who will be the price leaders. Right. So we are waiting for the long-term effect, but for now we are seeing the short-term effects of this competition.
And at this point, we keep wondering who the consumer can believe in, going forward, when it comes to
that's market share.
Our energy, security,
exactly.
As a country. We've, heard the arguments about, maybe we might need to also still import, fuel, into the country, even though we have this huge refinery. But that shouldn't really be the option, according to professionals there. They say, why not have more refineries?
Exactly.
More refineries, so that no one's afraid of, some kind of monopoly, at this point. But it's a huge investment.
Yes, it's a huge investment. We have other refineries. If we can kickstart those refineries, and if they are not working and governments don't have the capacity, I won't say they don't have the capacity, it may not be their priority right now to do that. They can sell it out to individuals that can do that. So the best thing is to let's first of all protect our own industries within before importing. And if you look at it, it's even more expensive to import. By the time you look at the landing costs, and it is also embodying our FX markets, because you need to source for dollars to do these exports. So I think it's better for us to refine within, yes.
But, with what we've seen that's, played out in the market so far, post-deregulation, the price wars, all of the, controversy surrounding the industry, is deregulation failing, in your opinion?
It's not failing. Like I mentioned earlier, I said, right now there's a disequilibrium in that market. So it will take time. It now depends on how long it's going to take for that market to be able to find a new equilibrium. Right now, the market is trying to find a new equilibrium, as I mentioned earlier. That's why we have this price discovery. Until when the price is discovered, before the market was deregulated, the government has been in charge of pricing. So government is no longer, it's not automatic. It's not failing. The pricing issue is not automatic. It's going to take time. That's why we're having this war. So when you talk about an imperfect competition, of course we know there's no perfect market in the world. What we have is...
I remember the economists back then.
Yeah.
Perfect.
No, there's
imperfect market. Imaginary perfection.
Yes. So in imperfect markets, this is what you see. So pricing has to be fixed. And what is going to fix this price, this word that we are seeing, is normal. It's either you are trying to fix cost or you are trying to fix price. So what we are trying to fix in this market now is the pricing. So we can't say deregulation is failing, that the market, because the market was deregulated, is failing. No. What we are trying to see now is what we call new equilibrium. And the market is efficient. Over time, we'll see that we're going to hit the new equilibrium, and this is going to be in the past. We'll also reference to it that you remember those days where we had price war. So very sooner or later, we're going to have a price leader that will lead, and we'll have price followers that will follow. And
the price leader will have mercy on consumers.
Of course. I've told you earlier that a price of PMS is dependent on, is a function of your production cost. You can't sell below your production cost.
So hopefully we get rid of profiteering.
Exactly.
Because that's been a major bane.
Exactly.
When it comes to, when you look at the history of, Nigeria's oil and gas, industry and market, there's always been that profiteering. People, shutting down their stations because they know that maybe price changes are coming and we now have to, go and start queuing in other filling stations. They just decide not to sell, to anybody. We've had that issues in the past.
It's over.
And hopefully,
it's over. Hopefully.
It's over.
It's over. But what we may likely start seeing is buying from, some are selling for $739, some are selling for $800, some are selling for $850. We might begin to see the issue of smuggling. Buying from we selling cheaper and smuggling to other borders. So that you get? So that might be the issue. But let's not hope that, okay, let's hope that prices will continue to come down. But I've said that prices are determinant, they are functions of global oil price. So you can't rule that out. So if global oil price is increasing, you don't expect prices to be coming down. And vice versa,
right.
Your production cost.
And definitely with all the forecasts we're seeing, these days, the oil market, we're seeing prices still depressed at this point,
exactly.
Having that range trade so far. But we did talk about, Christmas, approaching at this point, and I'm just wondering how the average consumer is doing, out there in the market. Do you think they're getting a good deal?
Yeah.
At the market?
I told Ini the last time I came that I don't see prices going up in December, because that has been the norm, that during festive Christmas season you see prices hiking. But what we are seeing this year is quite different. Prices have continued to decline. The price of a bag of gari, 50 kg of a bag of gari, is now 18,000 naira as we speak. This time last year it was 40,000 naira for a bag of gari. Then you talk about beans, 50 kg of beans is now 60,000 naira. In fact, when I saw the prices, I was like, wow. So prices will continue to, because there's consumer restrictions.
And we did see the FCCPC actually warn against profiteering,
exactly.
From even the markets and most of the transporters, at this point, because they know they like to raise prices when they see demand, is really high.
Yeah.
Do you think the transporters will listen to the FCCPC so that people will get to...
Well, I don't think they are listening.
Even though fuel prices are quite...
Fuel prices are reasonable. Then it now depends on demand. If you have a lot of people wanting to travel and all the rest, and the issue of insecurity. So the prices are, it's not just putting it out there, don't hike your prices. What are the regulations put in place to monitor all of these things? So I don't see it happening. Transportations, for those traveling, you want to talk about airfares.
Maybe the users can report.
Who are you reporting to?
We report to the FCCPC, say, oh, okay, these guys are charging us too much to move from point A to B.
They don't need to
And they
report.
take maybe
They should have their agents.
Agents
in
around.
all of this,
right.
yes, transport, whatever.
Because the consumer has been through a lot. We don't want to put more pressure on them.
So talking about, you don't talking about airfares.
That's a different kettle of fish
So,
at this point.
So because
airfares,
of the high insecurity rates, people are avoiding going by road and are maybe tilted towards.
And it seems some don't have a choice. They just have to go by road.
Exactly. Some don't have a choice. They have to go by road, and you still see paying as huge as, I don't know how much they pay, but I know it's quite high.
All right, you did mention, price of gari, coming down, rice and all of that, but we're not going to eat this rice alone and this gari. We need some protein in there. What's happening with chicken? What's happening with turkey? What's happening with ram? This is kind of stuff I like to eat. Can I afford it?
I need a big guy. You're talking of ram?
Yeah, I'd like to eat ram.
Well, an average Nigerian just want food on their table.
Right.
Yeah. That food can be served with pomo. They don't care. But as long as there's...
But we're trying to build the leather industry, so we're trying to discourage pomo consumption.
Of course, you can discourage it, but you can't stop people from eating it. People will actually eat it. Okay.
So what kind of Christmas is this going to be? Is it the type where we can actually have live chicken with our meals? Is that the kind of Christmas we're having this time?
I don't think that's going to happen. It's like you're in a dreamland. I need to wake you up.
One live chicken is how much now?
I need to wake you up. One live chicken is about 35,000.
35,000?
Yes.
And we know chickens don't go that far.
That is half of somebody's minimum wage.
Wow.
Minimum wage is 70,000 naira. 35,000 is half of your minimum wage.
For one chicken?
For one chicken. So you can't do that. So you'd rather go for beef or go for frozen chicken. I think a kilo is still 5,000.
We know some people don't really like frozen chicken that much.
Then go for live.
Because of taste.
You want to live the life. Then go for either live chicken.
Then you spend half of your minimum
wage on chicken.
That's incredible.
On live chicken.
I remember a time when chicken cost like 2,500 for live chicken.
1/8.
1/8. I remember those times. Yes. Not so far away.
So.
Right. All right. Let's hope we can get some, interesting protein for this Christmas, hopefully. All of us. Thank you so much, Dr. Foma Wokolo, Assistant VP, Economic Research, Financial Derivatives Company. Thank you for coming on today.
Thank you for having me.
And I wish you a lot of chicken.
The way you're talking like you have chicken poultry here.
Man,
I don't mind.
Who knows? I should have actually grown chickens before now. Maybe in my little farm and waited for Christmas for them to grow. But maybe I'd have gotten attached and maybe not want to eat them. But thank you so much. So great to have you. Thank you. All right, we'll get a check now what's played out in the global economy. That's in a moment. Just stay with us. All right, let's get a quick check down what's playing out in the global economy. We've seen Bitcoin there falling today, cutting short a recent rebound as traders remained largely cautious towards cryptocurrencies with an anticipation of key U.S. Economic readings, adding to the risk-averse mood. You see Bitcoin fell about 1.1% to $87,815. The world's largest crypto had recovered as far as $90,000 this week before pulling back today. Broader crypto prices also pulled back from a short-lived recovery, although overall losses were limited by thin trading volumes on account of year-end holidays. Then we see Ardeni Research. They've raised their gold outlook, arguing that the sharp rally across precious metals reflects macro and policy concerns rather than a rebound in global economic activity. Gold prices are up around 69% this year, lagging gains in silver, platinum, and palladium, which Yardeni says weakens the case that industrial demand is driving the move. Price of basic metals tied more closely to manufacturing have risen far less, reinforcing that view. All right, to EVs now. Tesla Inc.'s Europe sales contracted in November, according to data, while Chinese rival BYD logged strong year-on-year growth and a steadily increasing market share in the region. Tesla's sales in the European Union The Euro Free Trade Association and the UK fell 11.8% year-on-year to 22,801 units in November. That's according to data from the European Automobile Manufacturers Association. All right, let's look at the big investors now. Cathie Wood's ARK ETF published their daily trades. That's for yesterday, revealing a significant reshuffling of their portfolio. Leading the day's transaction was a sale of 60,715 shares of Tesla Inc., amounting to $29.2 million. This move continued to trend, the continued trend observed last week, where ARK sold 124,000 shares of Tesla, indicating a strategic reduction in their holdings of the electric vehicle maker. On the buy side, ARK made a substantial investment in Oklo Inc., acquiring 107,000 shares valued at $8.9 million through its ARKQ ETF. This purchase highlights, ARK's growing interest in innovative energy solutions. To aviation now, Ryanair, they fined 255 million euros for abuse of dominant position. That's according to Italy's competition authority. They fined the Ryanair DAC and its parent company, Ryanair Holdings PLC, over 255 million euros for abusing its dominant market position to hinder travel agencies. The fine follows an investigation that found Ryanair implemented an abusive strategy against online and traditional travel agencies from April 2023 through at least April 2025. And to social media now, TikTok owner ByteDance, they're planning to step up their already heavy investment in artificial intelligence next year, as China's largest technology group has raced to narrow the gap with U.S. rivals. The Financial Times reported, people familiar with the matter also confirmed that the Beijing-based company has drawn up preliminary plans to spend about 160 billion yuan. That's $23 billion in capital expenditure in 2026, up from roughly 150 billion yuan invested in AI infrastructure this year. And Singapore's core inflation rate remained unchanged at 1.2% year-on-year in November, according to official data released today. The core inflation figure, which excludes private road transport and accommodation costs, matched October's reading of 1.2% and came in slightly below economists' expectations of 1.3%. And in Norway, their oil production in November 2025 averaged 1.882 million barrels per day, exceeding the Norwegian Offshore Directorate's forecast by 4.3%, according to preliminary figures released. Total petroleum production reached 2.09 million barrels per day of oil, NGL, and condensate, with NGL contributing 190,000 barrels of condensate, adding 19,000 barrels daily. All right, let's get a quick check on what's playing out with the local boss right now. Did get a check on investing.com, 153,000. That's the trade right there for the all-share index, up 0.46%. So it's already showing, strong signals there that the bulls, as they seem firmly in control this week already, just going by this, but who knows, things could change. And most actively traded stocks, we're seeing First Holdco trading at 47 naira. 10 kobo, Access Holdings, also financial services. FCMB is getting attention there, up 1.90%. We're seeing a pullback for CHAMS, about 0.57% down. Then Nimeth, that's trading 6 naira, 10 kobo, down 0.81%. That's according to investing.com right now. So definitely, we'll see the week moving along just fine. We have tomorrow. That should be the final trading day of this week. Definitely hope you're prepared for that, as investors are awaiting the Santa trade. Thank you for watching Business Morning. I'm Ladi Williams from the team right here at Channels HQ. It's bye for now.